The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. This is my time at 11 o'clock till noon Eastern time, and we're looking at Monday through Friday, unless there's a holiday, right here at 877-927-6648. I'd love to be here. I'd love to take your calls, and this is an important week. A number of things. I'm going to go through different charts. I had a couple of questions I'll try to get to. Let's go right into it. I don't want to waste any time. So a question about the 300-minute chart of the NQM. This is still June for me. NQM made a 3,803 round number high at peak D on the 300-minute chart, and that's the June E-mini NASDAQ future. It's holding the 9-period moving average. The MACD did pull back, stochastic pull back quite a bit. And what we've got here is a nice high-level consolidation. And that's what I was talking about for my subscribers to my opening call today. One of the reasons why I didn't really want to buy anything new, I was prepared to short, I wasn't prepared to go long, is because in the context of what we're looking at right now, there are a number of indicators that are saying we don't yet have a screaming volatility index to the upside. It's screaming to the downside, help, help, help. But at the same time, on the upside, you've got so many charts that are making legs D, E, and even an F that it is worth on the shorter term to be somewhat cautious here, so that even if I've got C's in some case, and I do in the Dow Diamonds, I'll explain how I think it could unfold over the coming few days. Meantime, the E-minis has made a doji E at 1954.75. That is the June. I'll go to probably tomorrow or Thursday. I'll go to the what are we talking, September contract. And in the meantime, I've got this. And most importantly, the MACD is still very strong, and the slow stochastic is holding at 97%. I have some indicators that are saying upside at this point could be somewhat limited without a breather. That's all it's saying. And then the 120-minute chart, which I show my subscribers every day, and what I do is I don't give a trade on the E-minis. It's almost like it would be another service. I mean, there's just so much I do. I just wouldn't have time to do it and to follow it. But I do explain what I'm looking at, and I show different chart patterns, that there was a rising wedge, that it broke out of the rising wedge, that it went to 1954.75 in the 120-minute chart to a peak E. It pulled back quite sharply. That's where you can expect the longest and steepest decline. Well, from 1954.75 to today's low of 1943, you've got almost 12 points. And now there's a beautiful candle back above the 9-period exponential moving average. This market is not just going to give it up. It's going to give it up in certain ways, but the only way to really start to decline is if there is bad news and that volatility index starts to push not from the 11 to 12 area, but into the 13s. And right now it's at 11.23. So that's still saying there's buying pressure. Now, very importantly, how this particular 120-minute, 2-hour chart on the E-minis closes today is going to be very important. If by the end of the day it gives back quite a bit, that's going to say one thing. But what if I went to I don't know if I've got it. I hope I've got it updated. What if I went to the Dow? No, I haven't got it updated. Let's go to the SPY. Look at the SPY. I know that I've done that. That's gone to a peak D in the 120-minute chart, holding very nicely, trying to hold above the 9-period moving average. But look here. You've got an E, potential peak E, or at least leg E as far as we're concerned right now, because the day is not finished, in the daily chart, and the MACD is just beginning to flatten out a tad. and the stochastic still at 97%. And that intimates to me that we might just have a high-level consolidation rather than a steeper pullback. A steeper pullback could still come a little later on in June, but I'm watching real closely because if by Friday there's a sudden decline, and that decline takes the SPY, which is at 195.46, down 12 cents right now, takes it down under 193.50, that 192.94 area is going to be really critical for support. Now let's look at something else. You've got the Dow down 7. It had been down deeper earlier on. So let me just put this, and I'll give you all the numbers, and I want to go to callers if we're going to get callers. So let me take this away, 120-minute chart right there. So we've got peak. I'm not calling this a G. I decided it will not be a G, but it'll be a C. Could be wrong, but the MACD so strong, stochastic still so strong, I suspect that we're in a little topping mode right here. Maybe I should do not an oval, but a rectangle, but right here. And how, no, it's too many bars. Right here, the next bars going into early next week, the 16th. What's really important is, do we just make a nominal peak D in the Dow and then pull back? Or is this going to be a high-level consolidation where it makes a cluster formation, so it gets alternative wave counts and all sorts of things, maybe even an instant restart, who knows? All I know is that if the Dow trades into the 17,130s this week, that's really positive. If instead by Friday it starts to break under 16,800, that's saying be careful short term. The weekly is still in leg D. The monthly is in leg E. Let's go on. The S&P, SPX.X, you're looking at E/A. I just don't see this as being A, but who knows? With the stochastic at 97% and the MACD still strong, and the weekly in leg E, but just now bumping into that area I call the inside track, Chapman wave inside track repellent zone. And that's going to be very important. Why? Because that repellent zone at the S&P is at 1949.74 right now, down $1.57. If it were to go to 1963 to 1965 in this move this week, I'd have to say that that is just extremely strong action. Can't fight that. But at this particular point, I think it's going to be a stealth move to the downside. Something's going to happen and just suddenly drag us down for at least a consolidation here on the shorter term. If you're looking at the QQQ series, I'll first mention the comp index is down a fraction at 43.35. But the but the Power Shares QQQ Trust series this is very interesting because yesterday the high was 92.98. Today's high is 92.96. Got 3 cents to go. And it extends that, not a peak E. Well, it won't be a peak E if we have a parallel high with 92.98 from yesterday. So anything below that says there is a peak, but this is still good action. So we were long, had a great profit, took profits last week. Too early. That's all I can say. It was too early. It's gone a little bit higher, about 1.5 points or so higher. It's acting pretty well. I don't know what the count is in the weekly. I'm calling it E/B, and the monthly chart is in F, unless it's recycled. So this is an exciting time, I must say. So now let's go on. You've got the GC. Should I go to M just for now? GCN. Gold is acting quite nicely here. The GLD. I'll go to the GLD. The GLD. Because gold is up 6 at 12.60, silver's up 13 cents at 19.20. The GLD has just made a leg B. And I was talking about this yesterday and saying, yeah, on very short term, I can see a bit of a bounce. My weekly chart is still very negative, and the monthly chart is still very negative. So we'll see what happens. And those are the parameters. I was asked, would I go long, would I go short? And I said, I can't say anything yet. I need a couple of days for it to settle if there's going to be a bigger move other than just another arch formation bounce in the GLD. So let's just leave it at that for now. I don't know. And the crude oil, let's see, crude oil, is that an N contract? LN, let's go to N. Acting quite nicely, up 12 cents at 104.53. Peak A, B, C, D, E, and I'm not sure if this is a brand new A or this is an F. So it's, you know what I'm going to do? I'm going to get to my continuous contract. I always believe in that one. Yeah, it's the same thing. I don't know if this is a G or a brand new to the upside. I have to wait on this one, but it is a D in the weekly chart, and that says from here on, got to be careful because you could start a pullback. So crude oil is acting okay right now. Let's see where it goes. Above 100, it's at 104.51 in the continuous contract. If it goes to 106 or higher, that's very positive action. If it pulls back under 103.30 to 102.80, not so good. Now let's just go to the TLT. This is going to be very important. This week is important for a number of reasons. TLT keeps pulling back. So bonds are pulling back. TLT is pulling back. And what it's saying is that money could, in fact, continue to filter out of bonds and into stocks. If that rotation continues, then you will see those specialty stocks that we've been looking at, talking about for a little while now, still acting pretty well. Nice action on the Fords and the GMs right now, the GEs, etc. So, and Alcoa, let's just see what Alcoa is doing. Yeah, Alcoa is making a peak C, should still go to a D. Now, I had a couple of questions. I'll go to them. I'm just going to mention that the dollar is acting very well. It's filling in that inverted Roman candle from the other day. It's gone just above the halfway point. Oh, it's close, above the halfway point of the wick of the 5th of June. And all I can say is that if the dollar goes above 80.85, it's probably going to retest the recent high of 81.02. And if it takes it out, then that'll be very good action. I wouldn't have thought that it was a possibility from the way it came crashing down. EUR, and now I'm going to go to EUR. Yeah, this is that H formation filling in the positive Roman candle of the other day. So I'm watching these currencies real well, and I'll just add the VIX right now because I said I'll be as thorough as possible. Now the VIX 11.25 couldn't even hold the rally from yesterday. It's struggling. It's up 10 cents at 11.20. Now I was asked for a couple of times now, for about a week in fact, I've been asked about RAD. This is Rite Aid. Would I do? What was the question? Rite Aid. Can you relook at RAD? I believe it's good trade right now. You know, I showed it this morning to subscribers. I showed it because we've had some fantastic trades in RAD. We bought it at 178 or 187 way back, and we rode it, and we took half off, and we rode it at about 160% profit. We've had some really good gains, in and out. But I've decided that I don't anything right now. Why? Because monthly chart soared. It just screamed to a new recovery high above the 6.74 high of of June of 2007. And I was saying to myself, at that level, you should have had some kind of retracement. Instead, it continued to $8.62 the other day in leg F. I can't call it anything at this point other than leg F. I'll make changes if it needs to be. But I've got an F in the monthly, alternate count in pink, F in the weekly, and a peak F top at 862 in the daily with a huge island reversal to the downside. I think the sixth of it recovering is over. Now it's a regular stock. I think it's going to pull back. I'll be right back and take your questions.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. We're back. Dow's down 13, S&P's down 271. And what I want you to do is, I want you to say the IYT, it's just that's the iShares Dow Jones Transportation Average Index Fund, has made an doji candle at 148.18, 148.18, and that's an F/B. There's a chance it could have one little more spike to the upside. It's getting tough, but the MACD is turning down. It's been really strong. Stochastic's gone from the 95% area to the 92%. It's still very strong, but showing that there's a divergence between the recent top and the top before that at E. And the monthly chart is in E, and the weekly chart is in D. So I'm looking at this, and both of them look quite extended. They can go a little higher, but they're getting extended. And I'm just saying to myself, you start putting this whole thing together with the NYA.X in D. MACD is good. Stochastic is 96%. But leg D in the weekly chart, leg E in the monthly chart, and I'm saying to myself, either I don't hear any bad, I don't see anything here on the horizon. In other words, I don't read anything. I don't see anything other than there are a couple of little indicators that I have, and most importantly, I've got the letter of the Chapman wave. And that's all I can go on. And what I'm going on, and I'm saying to myself, either it's a high-level consolidation obviously there are three ways we can go. You can go sideways with a high-level consolidation, not going anywhere from here, a little bit higher, a little bit lower, but not really breaking down or breaking up. Or there's just a powerful move where all of a sudden those laggards just taken another bout of strength, and you suddenly get some of the insurers coming on strong, and you rotate into different sectors. Or out of the blue, you're going to get bad news, and just suddenly there's going to be the slippage and all the supports hold. Well, I like to go step by step. So what we've done for my opening call for my subscribers is we've begun to add to the short position, but we're also long. And as long as the longs are working and the shorts are working, that's all you want to do in the market, is you want to be right. And then, if whatever your market perspective is, can be influenced or not influenced, but you want your positions based on your technique to be working. And that, to me right now, if that's working, and if the shorts and the new short that we added this morning, two shorts, if they are going to be working, that says we've honed in on the specifics. And then the generality of market trend and all that we can worry about a little later. So the question again, when I look at GE, my Dow Quartet. So GE is in leg E/B. It could be a peak B/E. I don't know. Stochastics at 80%. MACD's good. We've unfortunately just, I had an email just a moment ago to say, what was it? Almost bought it. That's G. We missed it twice. Just missed it. Get going long. Now I said, I don't know if I want to buy it up here. Risk reward is a little tough because it's the best entry. We've had it before. So I almost bought it. You said buy, and there was another one that we bought which has done nicely, but gave a specific price for GE. Looking at Traders Corner today, I'm assuming no one got it below 26. I don't know. It looks to me like I'm very strict on this matter. I wasn't around. I had to leave the moment I gave the update, and I didn't put in the buy, and it was to be up buy under 26.70. And after 12:30 on 2 days or 3 days ago, I don't believe it did trade under. I thought I saw it go by. I was so confident about it. I was patting myself in the back saying, wow, are you lucky that it just zipped under it. But it didn't print that way. So it might have been my trade statement was showing it. I don't know. But I'm very strict. So it looks like we didn't get it. If anybody did get it on my subscribers, please let me know. And it's gone up very nicely from there. It's gone up 60, 70 cents. Not a big deal. If this is going to really break out, we'll have time to buy G on any pullback if I assess that the market is not going to be taking a dive in the near term. So no big deal. It goes on to say you've been doing pretty good with picks. You know, I've been lucky. Some of them have been working out very nicely. Now, this is what's really interesting to me. GE will be a harbinger because it's I looked very closely at doing something with the XLF today, but here again, leg C, very strong. I don't know if I want to buy it up here. I'd rather have a pullback. So the XLF is doing well, but it's still tough for me to actually buy it with the risk reward. IBM, as we go out, IBM's not doing well. Triple M is doing nicely. It's in leg C and UTX. We'll talk about it when we get back. Got a couple of questions I'll get to.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everybody, we're back. Basil Chapman, Tiger Editions Hour. Now we're looking at the volatility index. It perked up the last couple of days, even as the market was all-time highs in the indexes, not the Q's all-time highs, way up in the 120 area, but recovery highs certainly. So this volatility index is going to be very important this week for a couple of reasons. I'm correct in anticipating that we're real close to some kind of a pullback. All I can say at this particular point, a pullback, because the technicals are so strong. What's going to happen to determine that the Dow, S&P, Qs, whatever it is we're looking at, New York Stock Exchange, has gone from a sell signal. Even the sell signal needs a lot more downside activity. To go from the sell signal to the sell mode, that's going to take a great deal. It's going to take at least 350, 400 points to the downside to get those technicals to start to falter. Now look at this. When you're looking at the Dow daily, the MACD is still very strong. It has to get the green line. That's the fast-moving average. Remember, I called it a fast-moving average. Over to under the slow-moving average, the red one, would take a lot. You'd have to see the decline testing the 16,819 9-period moving average first, and then start to close under that 9 EMA at 2 out of 3 days to get that MACD fast moving average, the green line, to come even close to the red line. number one. Number two is for the stochastic to drop from the 97% to under 80%, which is where it starts to show deterioration in the technicals. There again, you're going to need quite a lot of points. So I'm of the opinion right now that it's going to be a slow stock by stock, sector by sector decline. Already seeing one particular sector that might be vulnerable. One we shorted today, not the index, but one of the prime stocks, that particular sector. And we'll just have to see, because if this really does decline, it's going to say to us that there has been a decided move between people buying certain products and people repairing those products. And that, to me, is important. So here we go. When I'm looking at, I want to do the IYC, which is the, this is the iShares U.S. Consumer Services ETF, possible peak F right here. Very unusual. I mean, there are just so many charts that are doing this. I have one foot on the accelerator, 1 foot on the brake. We're looking at the potential for a turnaround. So now what I'd like to do is to go to the RKT. We've got a moment here. And the RKT is in fact is Rock 10A. Rock 10A. Wait a minute. Was this? What sector was this? Let me just find out what it says. Rock 10, huh? So Rock -10 A shares, and it comes up saying, with an eye directly on the consumer, Rockton delivers low-cost, high-value paperboard packaging and marketing solutions. Yeah, I thought it was that, but it used to have a different name or something's changed. Anyway, let's just look at this and say, where are you? And the answer will be is finding the low bar, 2177, 2284. So we'll start it right here. Oops. Ay. So, you know what? I'm going to do this. You do it now. So what I'm looking at is in this particular stock, I'll do the lettering and numbering a little later on. Is that on the shorter term, we're looking at peak A, B, C, D, and it's making a little arch formation pullback. At 101, RKT is down $1.17. And I remember talking about this just briefly yesterday. I said, gee, I'm looking at this. I'm not sure I can make a decision right away. Looks like it might be pulling back. If it pulls back under 100 to 99, between 99 and 100, at this particular point, that'll be negative and say, be careful. It's had its big move to the upside in the daily. Now it has to prove itself, and the weekly will start to falter. If by a week from tomorrow, Wednesday, it's already recovered from that and it's trading at 102.50 to 103.30. Nice action, rectangle formation. It could start working its way towards the highs. I would not be buying it right now. I'd wait to see where it settles down. Let's go to our first caller. We've got Joe in Boston. Joe, how are you?
I'm well. How are you?
Very well, thank you.
Good. Hey, I wanted to take a look at FXI on a longer-term chart.
Okay. Now, I've got a very interesting thing. The last move, and it might have been before you had called me, a very nice peak D top. Folks, the FXI is, in fact, the iShares China Large Cap ETF. It used to be called the Xinhua, I think it was, and then they changed 25, I think it was. Now they've changed the name. And what we're looking at here, I'm just trying to quickly finish up my Chapman wave notation. I'm going to do two things. One is A, B, C, D, and E. It's in leg E right now. In leg E, not a peak E, but a leg E. It might, no, it couldn't have 1, 2, 3. It couldn't have made an instant restart. It could still have recycled. So at this particular point, just an immediate glance says it's in a buy mode in the daily chart. The MACD is very strong. Stochastic is holding at 92%. It's matching what we're looking at in our chart. Then you get to the weekly, and this is the thing I discussed in the FXI a little while back. And what I said is there is a chance that it keeps alternating between a cup formation and an arch formation. If it's going to make the cup formation, and right there is we're looking at it as a potential cup formation, it needs to climb above the 200-period exponential moving average, and this time hold there, be able to say that it's the next leg up to give it a chance to retest the previous high. That high was at 4.32. So the weekly chart has extended above the 200-period moving average. It is in leg B. There is improving technicals of the MACD and the stochastic, which is at 86%. And even more importantly, what I'm looking at here is that the monthly chart is the one that I've just been real wary of for a while. Reason being, it made this triangle, how many have we looked at lately, that it's just got they've got the sideways movement, and they refuse to break out of the apex of the symmetrical triangles they're making. So this one is exactly the same sort of thing. And so I don't want to talk about the monthly yet, other than to say it's starting to improve, but until it breaks into the 40 to 41 area, it's just stuck in this slightly rising lows and slightly lower highs. So now let's go back to okay, here's my assessment. The FXI, as I see it right now, is acting very well. It is having a rally that started back in May. Back in April, March into April, and has continued. Now, the question is, if I was long, I was just going to treat it on that basis. If I was long, I would put a stop, some part of my position. It's at 37.75. I'd give it room because it's had such a nice big move. I'd give it room between 36.54 and 36 as some part. Why? Because the weekly chart says it wants to actually climb higher. Now, if you ask me right now, what would I do? I'd say it would be very difficult to buy it right now because everything my eye tells me that it should have at least a pullback from the 37.75 area to 37.23-ish. That's the 9-period moving average. And that's where I would start a position, even though it might be making a short-term top and could come down quite sharply. That's at least if I wanted to go long, I'd be thinking of starting a small position, and I'd have to give it a little room to see how it holds the 36.50 to 36. Yeah. It holds the 36s all together.
I was thinking if it pulls, I'm not in it. I was thinking if it pulls back into the 36.50 area, that might be worth a shot, depending on how it comes in there.
Right, and that's the reason why I said I'd have to wait, is that at this point you've got risk-reward. Okay. And it's just not there. You could be absolutely correct by buying it now, but that's not visually what I'd be looking at. What I would be looking at, I'll just grab the 120-minute chart, A, B. Yeah, everything here said that there could be a short-term pullback, and of course this is the FXI, so they might wait until tomorrow before they pull back. I don't know, but I would start looking at it as a stop position based on whether the weekly can hold above 83 to 82% on the next pullback. And 36.40 is the 9-period moving average support in the weekly. And 36.54 is I think that's the 200-period simple moving average support in the daily. But 36.09 is the very strong support that better hold in the daily, because if it breaks under 36, I'd have a problem. That's why I would prefer to kind of nibble on this more in the 36.50 area. Why? Because if it's this powerful, it shouldn't take more than 1 to 3 sessions of a pullback before it wants to attempt to retest the highs that it's making. Right. I do like it.
Can you look at one more real quick for me?
Okay.
I just wanted to see what you thought of this bottom, RAX.
Oh, I haven't looked at RAX for a little while. Oh, I used to have this note. I had a note. I
don't know if you thought that was like a capitulation low on the weekly.
Okay, there are a couple of things about this. Now, I've lost some of the notation. I actually did this recently because it had a big spike up, and that spike is when I looked at it on the ticker, and I said, oh, I got to go back and notate it. I tell you what I like about this. I love when stocks have a big gap, which this did. The 16th of May, and it closed the day before at 30.68. Next day, it's trading up in the 35, 37 area. Now what it's done is filled a little bit of the gap, and it's gone to the 200-period moving average. Two things. One is, on the 120-minute chart, it's probably given us a good buy mode, and that's taking you just above the gap bar high. and that's important. I'd probably say right here at 37.89, even though I'm looking for a little bit of market pullback, I would. Well, it would be tough to say buy it right here at 37.90, but the reason I'd say that I want to nibble on it between 37, around about 30.60s. That's where I'd buy it, and if it starts to pull back, it mustn't go under 35.91. That means if it holds, it's making a rectangle. It should try to tackle. Racks, folks, we're looking at, you should try to tackle the 200-period moving average as support rather than resistance. And the moment this thing can start trading in the 38.50 area, you've got 38 to 37.70 as a good cushion. That's the way I would look at it. I think you're right. Market conditions, of course, are also important. But right now, as a stock that's doing very nicely, I think you're right. But I would not get a big position. I don't have a small position. I'd rather add to it in 3 weeks' time if it's holding really well and the general market is not dragging it down.
Yeah, I mean, this thing came down from it was real
80.
high. I mean, so I didn't know if, that looked like a little bit of, if you look at it on a long-term chart, that just they capitulated there down at the lows.
Yes, I agree. And at the same time, I love the action that hasn't given back the gap-up gains. But it does mean that just on a short-term position, you got to be a little bit careful. But there again,
how secure is when you look at the gap there? Okay, so how secure do you think that 35 area is?
Oh,
based on the last 20 days, do you think 35 is pretty good support there?
Because of the magnet of the 200-period moving average, I'd say that the reason why I say that if it broke under 35.80. I'd be a little bit nervous if it closed under that for 2 consecutive days, because that would say, okay, now I want to retest the gap. But the gap itself, the high of the bar before at 32 round number high on the 15th, from the way it's looking, unless market conditions deteriorate, I would say that it's more likely to travel a little bit higher before it starts to test the full gap. But it's really, I have to wait for Friday to see where the weekly closes. Because if the weekly closes anywhere in the 38.50s, it says it's going to try to test the 200-period moving average weekly at 40.50 the following week. That's the way I would look at it. Hope that helps you.
Basil, keep an eye on it.
Well, thank you, and you keep an eye as well, because it's a favorite when it finds the trend. Because whatever trend, up or down, it just charges ahead. Thanks for calling. I appreciate that. Let's go to Neil Portland. Hi, Neil. How are you?
I'm good, Basil. Thanks for taking the call.
My pleasure.
Had a question on Kraft, KRFT. There's been a lot of action in the food industry group from the investment banking side, a huge merger that's just gone between Tyson and Hillshire.
Correct,
and
yes.
From what I'm told, Kraft Food has probably the greatest amount of food brands out there. Jim Cramer effectively does a sum of the parts calculation. It's something like $70 billion. I believe the market cap right now is around 40.
It's a phenomenal figure. It is just a phenomenal figure. I agree. And it's one of the survivors. It's been split. It's been done. Also, a whole bunch of things that have happened. The spin-offs and all things. And what happens is Kraft, which used to be in the Dow, KRFT, trading at 59.72, down 71 cents. I have it in a leg C in the weekly, so we're going to talk about it because this is something to keep in your radar. So hold tight, Neil. We'll be right back, and we're looking at Kraft Foods Group, Inc., KRFT, straight after this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
And Kraft, we're looking at Kraft with Neil in Portland, Oregon. I was up in Portland, Maine this past weekend. It's really proved tremendously. It's a lot going on in Portland. Beautiful, beautiful art gallery. Didn't go this time, but they have fabulous exhibits. So, Neil, just remind me again, do you have a position in Kraft?
I do. I've got a small position. What concerns me about it is I bought in around 60, and looks to me like you've got an F on the daily side. Looks like it's recycled once. Again, it looks like it could be vulnerable to some kind of short-term downside, but I'm looking at it more as a longer-term type scenario, again, with the action we've seen in the food group.
You see, I have to tell you something. This is a case I'm kind of upset with myself, and I had mentioned to subscribers we want to get back. We had Kraft at one point. I mentioned that we wanted to get back in. Haven't been for ages. And the only thing about it is that that I didn't have enough history on the after it split off. So the big pullback that it had going into 2014, and then in 2014 from the 60 area down to the to the 50 area to 50.54. That was a bigger pullback than I anticipated. So I've really missed this move to the upside, but I keep saying to myself, they are the survivors of the business. They are the ones that have the products. And I love the fact that you've got it as a kind of an initial position. But you bought it before and held it, or you just bought it recently on the pop-up in the last days?
Just recently, yeah.
Okay. So you see, that makes a little bit of a difference. You said you had bought it the 57, 56 area. I say, hey, you know what? I wouldn't even want to touch that position, even if it pulls back. Try to keep it as long as possible. So here's my thinking. Okay. Well, let me go through this as if I'm looking at it now and I'm saying, okay, what would you do? Technically, I would, because it's leg C in the weekly and the technicals are very good, monthly is in leg C, I think this is going to go higher this year. So let's just get that out of the way. Does it pull back? It can pull back sharply, and it has. So what I would suggest to you is that the position you have now, you think about it. If you're prepared to put up with a pullback to the 57p level and still keep that position, that's one thing. Let me think of it completely freshly. I'm going to suggest to you that the pattern I'm looking at says it could rally a little bit, make it a little bit of a kind of a head and shoulders pattern, and then come back between 58.50 to the 57.50 area. That's where I'd be really interested in it, and for a couple of reasons. Because it's just a tad under the 9-period moving average of the weekly, but still in leg C, suggesting that it should go to at least a D. So position you have, just think about whether you want to hold it, if it's going to pull back a little bit more. I would treat it, this is just my thinking, I treat it as a position that started off a little bit higher than you expected, but you would like to add to that position on a pullback. And rather than hoping it doesn't go down, now your thinking is, I hope it goes down and then stops. just
right.
a point and a half, 2 points lower. And that's kind of the area. The sector's in play. Craft, I think, I don't know if it's in play because it's so big, but it's in the area that's desired right now. I think I'm going to recommend to you to hold it if you can, if you're prepared to put up with a 3-point loss. In other words, there's a potential 8 to 9% risk. But my thinking here is that you might want to add to it if it pulls back because the weekly is still so strong. So I hope that helps you.
You'd be a buyer somewhere around the 50, 57, 58 range. Is that the level you gave me?
Right. The moment it comes under 58, it goes on my radar as a potential buy.
Understand. All right.
Hope that helps you.
Very much. Absolutely. I appreciate the information.
And thank you so much for calling. Always appreciate it. So, folks, let's do this. We've got options hour, great options hour coming up. I just want to run this. I'm going to make it as simple as possible. The Dow is my key right now. I'm just keeping it as the key. I think we're going to make a new high tomorrow, the next day, of 16,970.70. Then I think I have to become a lot more careful, a lot more cautious. And I'm also watching the volatility index. The moment it starts to get to the 12s, this market will pulling.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.